Good evening, guys. Today I want to give you something different. I want to go through my complete portfolio, and I also want to tell you what I've learned while building my portfolio so that you actually have some takeaways and that you can use to improve your own investment skills. So I've divided this in three parts. One is going to be my mistakes. It's not going to be like, okay, I made a mistake, I had to sell with 80% loss. No, it's just going to be me reflecting on myself. Okay, what decisions did I make and why did I make them, and did I make the right call, or should I have done something differently? After that, I'm going to focus on the companies. So in total, I own 10 companies right now in my complete portfolio, and I want to share with you each of them, why I bought them, and whether I think it's still a good buy. And finally, I just want to show you my entire portfolio. So how does it look in a pie chart? That's basically how it's going to be. So I hope you guys enjoy it. And let's start with a few of my mistakes. Mistake number one, buying before completing my in-depth research. So what do I mean with this? There's an when I started investing, I guess I should start there. When I started investing, I started with ETFs and index investing. So I owned basically the VWRL, which is the Vanguard All World Fund, and I was just putting all my money there, and I was hoping that all the companies over a long run would grow with 7 to 8% per year, which is not a bad tactic at all. It's probably one of the best ones out there. But after building and accumulating some wealth, I wanted to switch to stock picking because I do believe that I am competent enough to beat the market. So what I did, I sold my shares of VWRL, and instead I started buying companies. But with everything that I know, and I had like a cash pile, and I wanted to start investing. So what I did is I started investing pretty quickly with the cash that I had. So I had several companies in a very short period of time. Looking back at it, I didn't do the same or the in-depth research that I would expect from myself. So that is something that I would take away from it. And in the future, I am going to do way more research before actually buying a company. And also, when I look back, when I just started stock picking, just the excitement of picking stocks and owning companies, it was really there, and I was really led by it. So after it's been a year approximately now. So looking back at it, I'm like, okay, I shouldn't have been so excited. I should have focused more on my research instead. Second part was, or the second mistake, is that I was buying for the sake of diversifying. So I was just imprinted with everything that I was told about index investing, why it's good, and how you at least need to diversify with 20 companies because otherwise you are having some unnecessary risk. That's basically what you've been told. But I followed this, but after reflecting on it, I realized, well, I am not investing from a financial, educational, let's say, hedge fund management position. No, I actually want to buy companies and I want to own them. So I don't want to look at it like I'm an hedge fund manager. No, I'm more like a CEO or like a shareholder of a private company, I could even say. So looking back at it, I shouldn't have bought all these like these. Not every company that I own was bought for the sake of diversifying, but previously I did buy a few companies just because I wanted to diversify. And looking back at it, I shouldn't have done that. It doesn't fit me. It's not a bad idea to diversify, obviously, but if you're just starting, there is no need to instantly buy 20 companies, in my opinion. You can just do it over the first 5 years. If your investment horizon is 30, 40, 50 years, why on earth would you want to diversify instantly? Like, I know it's just common knowledge to diversify, but if you are just starting, it makes no sense. No sense. It's also very costly when you look at transaction costs and stuff like that. So There was something I learned. I wish I learned it sooner, and I wish I would just do it over the course of a few years instead of a few months. And the final mistake that I'm going to point out is that I didn't give negative correlation enough thought. So what do I mean with this? There's a certain aspect when you are stock picking and you want to diversify. It is called negative correlation. So what that means is you want to own a company and another company, and what you want, if the other one goes up or the other one goes down, you actually want the other one to go up so that your portfolio stays in balance. So let me give you an example. In normal circumstances, if you would own both an airline and an oil company, the moment the oil prices drop, the oil company is going to probably drop in value as well because they are going to make less profit. But when the oil prices drop, that means that all the airlines, or the airline that you own, is going to have less costs to complete the same task. So their profit is probably going to increase. So it's likely that their stock price is going to go up. That will be a negative correlation. And I think it is very important that you keep looking for companies that have negative correlation. Another example that you might be interested in is the oil tankers that everybody has been talking about. The oil tankers are actually a negative correlation to an oil company, because if the stock prices of oil drops, or I should say the production, let me put it differently. If an oil price drops, that means that the demand is lower than production, supply. If there's too much supply, oil tankers need to use their space to basically just save all the oil. They just need to stock it up. If they need to stock it up, there's going to be less space for them, so they can increase their prices, so they are going to go up. Is it always going to be like an exact negative correlation, so if one goes down, the other one goes up? No, of course not. And I don't think you should be looking for these negative correlations for the short term, but maybe you should look for negative correlations in the long run, so that you, let's say, have an allocation and a negative correlation that protects you from long-term losses. And we'll get to that as well in like on both parts, I mean, but we'll get to that when I go through the companies as well. So let's start with the companies. So what I'm going to do, I'm going to just show you the percentages, and then I'm going to show you the company. So the smallest company that I own is 1.2% of the Assenderp Energy. Assenderp Energy is just an oil and gas company in the US, and yes, this I guess is one of my mistakes, but it's not a mistake that I regret. It's just looking back at it, I bought it for the wrong reasons. So what happened here? Assenderp Energy, I was already looking at DGOC, but I had my mind telling me, okay, you cannot put all your eggs in one basket. You need to diversify. You cannot just hope that this one oil and gas company is going to go up. You need to diversify and just lower your risk. So I was looking at other energy companies, or oil and gas energy companies, to diversify my stock pick. Looking back at it was not very logical, but yeah, we all make mistakes, and this was one of them. So why did I buy Assenderp Energy? I came across it through a blog, and I noticed that Carl Icahn, if you don't know that guy, he is an activist investor who has a few $billions, if not more, and he bought Assenderp Energy for $13 a share. At that moment, Assenderp was trading at $450 a share, so it actually dropped a lot. I knew that the gas prices were already low, and I knew this guy was like Carl Icahn was owning this company to basically turn it around. So I expected this company to go up as well, and I thought it would be a good diversification next to DGOC. This company has been performing very poorly for me in the past half a year. I think it dropped like 80%. I do not think I'm gonna buy more because I'm not that motivated and I don't need to buy any more oil and gas. But I do believe that this company will recover at least to when I buy it, and I think it's gonna go even higher than that, because at these prices it just doesn't make any sense. Same with any other oil and gas company, I guess. If you do not fear that they go bankrupt, I don't think you should sell at all right now in these market environments. So next, AMG. This is Affiliated Managers Group. This is an asset management firm, and I bought this company based on the financials. I don't know how it came to my radar. I think it was another blog as well. And this company had dropped like 50% in the past 52 weeks, like slowly but steadily. And I looked at the financials and the balance sheet, and it all looked very good, and I thought it was undervalued. I still think it's undervalued, and it has been, I guess I should say, it has not been performing poorly in these market environments. So I think it's still undervalued, and it's not that volatile. So I'm gonna stick to it. But this is also a company that I think I bought with mistake number one. I didn't do enough research. So obviously my position is small, so I don't mind it that much. But this is a purchase that I learned from. Then finally on this page we have Capco, which is Capital and Counties. This is I guess a real estate firm, so a REIT you could say. This company has been dropping like 40% since I purchased it, and it was already undervalued when I bought it. And yeah, everybody knows why REITs are dropping. But this company owns the Covent Garden in London, so it is retail. It's not that attractive to me. Looking back at it, there was perhaps too much risk that I didn't really. How do you say that? I think I should have. Yeah, I think as well I should have done more research. Like most of these companies were bought in a short period of time, and I think you should at least have a few work weeks of research in a company before you start buying it, at least when you want to own it for the long run. But again, I know for a fact that this company is undervalued, so I don't see a reason to sell it as long as I don't need the money, and as long as I don't see any opportunity that can give me a higher return. I don't think it is necessary for me to sell. So next. 3.5%, American Airlines. So yes, I bought most of my airline related stocks before the outbreak. So you can say that my portfolio has been hurting, probably hurting more than Financial Education's portfolio, because I believe his cruise lines dropped like 70%, and well, my American Airlines dropped a little bit more than that. So I purchased American Airlines, I believe, in December 2019, and this was basically because of a sector analysis. I analyzed the U.S. airlines, and I compared them all. And American Airlines is the market leader, and has like 42 billion revenue, I believe. It's the most revenue of all the U.S. airlines, and it was the one that was undervalued based on its competitors, and it was undervalued like by 50%, so I felt confident enough to buy this company. Looking back at it, I think, but that's also something I learned throughout this drop, so I think the outbreak has been pretty beneficial for my investment skills. And that's one thing that you've seen already in my videos, is survivability in months. I didn't do this check with this company. If I did that, I believe I would have noticed that it wasn't that attractive to invest in this company, and it was perhaps undervalued for a reason. But I thought it was undervalued because of the Boeing 737 and all those other issues, and the fact that they had negative publicity. So yeah, I should have done more research again, but I still think this company is heavily undervalued right now, and if it doesn't go bankrupt, the risk reward is very beneficial. So I don't see why I should take a big loss right now while it could actually recover, let's say, in 3 to 4 years. So I'm going to stick to it. This company is probably an unknown to you, and this is Turning Point Brands. This company mainly operates in America and Canada, I believe. And what it does, it is basically the market leader in the vaping industry. And I do not smoke. I have never smoked, and I have never vaped or anything like that. And it's also not the reason why I'm investing in this company. But this company dropped last year due to negative publicity. Like they were, I forgot the name of the devices, but they were devices that killed people. At least that was what the news was about. But these devices were not produced by Turning Point Brands. They were from the black market, and those weren't properly developed, one might say. But so it was undervalued. But what happened with Turning Point Brands is that they started to branching out, and what they did is they are buying CBD oil. And for those of you who do not know that, it is basically the very nice green plant that you apparently cannot mention. And yeah, they make oil out of it and they are selling it. And what makes it so interesting for me is that um, everything surrounding the green plant has been very attractive to investors because I think it's going to be a great opportunity because it's used for medicine and it's going to be legalized in like several countries, and you've seen legalization in America and Canada already, so they think it's a booming market. But you pay a high price if you want to invest in those kind of companies right now. But if you look at TPB, Turning Point Brands, you could see that they have already like the distribution because they have all these stores for the vaping and all that. So they have like already the distribution network to start selling it massively. It's already there. It's already a profitable business. They're just gonna add this to their supply. So for me, if I wanted, like I wanted some exposure to the green plant market, and I thought this was a good way to go. This company hasn't been dropped that much since I bought it. It has dropped like 50%, but it's recovered as well. Obviously, it's suffering from the outbreak because they have a lot of stores, like physical stores. They also have several online websites, but mostly the online stores as well. So yeah, they got hit, but I think it's still a good exposure for the green plant industry. It's a bit of a different one though. It's not like, okay, we're gonna have these fields and we're gonna produce the green plants and yeah, we're gonna sell them. No, we're more on the distribution level here. 3.7%. I guess the sixth company is Gazprom. For those of you who don't know Gazprom, Gazprom is a Russian gas company. It's probably the no, I shouldn't say probably. It's the biggest gas producer worldwide. And yeah, investing in Russia has always been very risky. Like I did a lot of research on Russia, and I think it's going to be less. Like it has become less risky over the past 15 years. So I thought it was a good buy. It was very undervalued. I'm down on the stock right now. Um, I think they're going to pay good dividends because in Russia they have a policy that you have for all the profits. I believe you need to pay 50% at least as dividends. Gazprom is also owned for 49% or 51%, I believe, something like that, by the Russian state. So it's it's basically from Putin, you might say, and yeah, they have been focused the past 10 years on building these insane pipelines to, I believe one goes to Turkey, one goes to Europe, and one goes to China. These pipelines will finish at some point, and then they will start just producing a lot of gas and start filling up all these countries or continents. So I think it's going to be a lucrative business. I think this company is undervalued right now. If you just look at what the pipelines costs, you basically get it at a discount. And yeah, I think it's going to be a decent company. I'm not going to sell this. And as you notice, I'm already heavily in gas, so I don't see why I would increase my positions here. But if I get more confident, I might. Like I'm not going to say no instantly. So let's go to the final four companies. We get bigger percentages here. 6.4%, John Menzies. John Menzies is basically a famous company in the UK because it used to be like the post office and stuff like that. It used to do a lot of things and used to do several things, but they sold all those companies and right now they are just a ground handler for the aviation industry. So if you go on holidays and you need your suits, your suitcases and stuff like that and you want them in the plane, John Menzies is doing that. That's their job. This gives you an exposure to the airline industry, so you may guess what happened to this stock. I think it dropped about 75%. It is currently a high risk stock, but since I'm already down immensely on it, I don't see a reason to sell this company right now. And I do believe that it is immensely undervalued right now. So if you think that the airline industry is going to recover and John Mancy is going to stay afloat, it is probably a decent buy right now. I also think that because this is the only public company that is available if you want to invest in ground handling when it comes to the aviation industry, I believe it is a decent exposure. And because I believe all the other, oh yeah, that makes sense, they are all privately owned, and they are looking to consolidate all these companies because you get like the economy of scale. You can reduce your cost and capital expenditure, stuff like that, the moment you own more of these businesses. So it is also a decent chance, there is a decent chance that this is a takeover target from private equity firms. I think it's more likely now because, yeah, obviously the price is very low, but I hope that the board is not gonna sell it at a cheaper price because, this company is actually worth some like way more than what it is valued right now. So as long as management is competent, I should be okay with this investment. Next, Criteo. Criteo is probably one of the most controversial investments that I did. It goes against, I think, basically everybody who is following tech companies or ad companies like Google, Facebook, and stuff like that. Why Criteo is investing, or I guess, sorry, not investing. Their business model is ads, and it's ads retargeting. So if you ever think, why does my computer know this? Like I was just looking for this flight ticket, and I went, and 2 days later, or basically the next day, I'm going to another website, and these ads are just showing me exactly the location where I wanted to go. How is this possible? Well, why is that possible? Because of Criteo. They use cookies for that, and well, the rules have changed. The laws have changed, the regulation have changed, and this company has been through the dirt. Like it dropped immensely. It was showing a great growth, I believe 30-40% growth per year. And yeah, all these regulations came, all the like Google Chrome and stuff like that. They changed their cookie policy. They know the ads no longer work. The revenue has been decreasing. Everything has been dropping. But if you look at the company itself, they are looking to change their business model, or they're looking for a solution, I should say, for the ad retargeting. So they don't want to do it with cookies anymore, but with something else. Obviously, they need to stay within the laws that are in place right now. But regardless of all that, even though the revenue is dropping and stuff like that, they have been reducing their costs, and they have throughout these, because this has been going on for years now, throughout these 2-3 years of revenue declines or steadiness and just like poor business circumstances or market circumstances, they have kept a positive free cash flow, and a decent one. And if you look at the free cash flow and you look at their balance sheet and you see the financials of this company, it is actually undervalued, and it is very unlikely of this company to go bankrupt because they basically have no debt. So the fact that they can reduce costs, that they can still have positive free cash flow, actually makes this for me a deep value play that can possibly grow into something more like the moment they turn it around, this company could actually just have their share price increase by tenfold. It's just unlikely, but even if it doesn't, this company is not gonna give me a bad return. So it's like low risk, high reward. I did buy this company a bit too soon. I guess it was one of the companies that I got too excited about. I checked the balance sheet and it all looked great, but one thing I overlooked is their assets, and they had some assets that they were basically it was a bit subjective how they were valued, and even though the valuation hasn't changed, I think that I should have waited a bit longer to make this an even better deep value play. But regardless, I'm not down that much on it, and I think it is still a pretty safe, low risk, high reward play. Finally, for this page, it's going to be a long video, so I hope you guys like it, because otherwise you're going to be bored for a long time. It's International Airlines Group, and I have 8.2% of this company. And you may have seen this before if you watched my European Airlines analysis on YouTube. This company basically came in third of all the companies that I checked. They had a decent balance sheet, they have decent return on investment, return on invested capital. Like, it all looked good. But why I'm buying this company is because I expect the European airline industry to get through the same circumstances or the same kind of events that the US airline industry went through, and that means that they are going to have a consolidation. So there are going to be less airlines out there, and I guess for the same reason as John Menzies, economy of scale. And International Airlines Group already owns several airlines. They know Aer Lingus, Vueling, British Airways, and a few others, and they're buying Air Europa this year, which is probably a bit unfortunate, but regardless, they are buying more airlines. So they are actually a consolidator, and management is not too afraid to make decisions that are not that great for employees but are pretty decent for shareholders. And we've seen it in the past. Like, this company has been run by Willie Walsh for a pretty long time, and I believe that this company is going to be the market leader in Europe in the upcoming decade. I think at least there are chances for that. It's also one of the few companies of this magnitude. So if you look at Air France KLM or you look at Lufthansa, like, those companies also own several airlines, but this company has the best profit margin, and obviously this has also been dragged through the dirt. And I guess if you look at my diversification and / negative correlation mistake, I think this is one of them as well. Not because I am buying this company, no, but I bought too many companies related to the airline industry. Am I regretting it? I guess in hindsight, yes, but it's not like I am going to sell these companies because of that, because I do believe that the decisions that I made, and that means that the companies were undervalued, I do believe that those still hold, and probably even more than before, because obviously they've dropped. And I'm not going to sell just because I didn't diversify, because I'm not that fond of diversification in the short term anyway. Like, it's going to be built over years, but it does mean that I'm not going to buy any other airline or any other company that is related to the airline industry. And finally, a company with 63%. Like, why don't you allocate properly? Assenderp. Make no sense. But you all know which company this is if you follow my channel, because this can only be one company, and that is Diversified Gas and Oil. Is there something I can say about this company that hasn't been said? Doubt it. I think you all doubt it as well. Like, there's many hours of content on my channel because of this company. Like, the company had a share price increase of I guess 60% in the past month, or let's say in the past 2 months. And what happened? Well, they are gonna acquire a few new assets, and in the past 2 days the company has been dropping again. And what I noticed, and people have been asking me, like, why is it dropping? Do you have any other information? And no, I don't know what the stock is going to do in the short term. I'm not that worried about it. Like, this company is going to be more worth in 2 to 3 years for sure. Like, there's no doubt about it in my mind. Obviously, it could go different, but everything I've seen, like, I doubt it. I doubt it. All the signs show that it is going to be worth more. But what had happened, like, I noticed this morning that a big shareholder, like one of the biggest one, has been reducing their position. And it went from 9% to 8% in the past few days. That's a big drop, obviously, and I'm not sure why. Like, I haven't looked that deep into it. I'm not that worried about it, but that could mean if they're gonna close their entire position, that yeah, the share price is gonna drop even more. But it could also mean because on Monday they're gonna go to the main market and there might be other buyers, and it could also mean that the stock price is gonna go up. Like, I really don't know. It's short term. I really don't know what the stock is gonna do in the next few days, weeks, and months. I do believe that by the end of this year, this company is gonna be worth more than what it's trading at right now. And that's, I guess, still short term, but that's just my gut feeling. In a few years, sure, this company is gonna be at least double the current price. There's no doubt about it. In the meantime, you'll have like 30-40% dividend over those 3 years, so it's not going to be bad at all. So yeah, to put this all into a pie chart, this is basically how it looks. So I'm heavily invested in DGOC, and yeah, the other pies that are pretty big are Criteo, American Airlines. Sorry, American Airlines is here. John Menzies and International Airlines Group. What am I gonna do next? I don't know. Like, we're gonna have wages again soon, so I might buy another position. Am I increasing one of the positions that I already own? I'm not gonna say no to that per se, because obviously things have dropped, so they are more attractively priced than when I bought them before. So yeah, I'm not sure what I'm gonna do yet. I will keep you guys in the loop, and yeah, I guess that's it. If you enjoyed it, please let me know down in the comments below. I'm not gonna make these videos every month just to get the views and the clicks and whatnot, because even though I know most people are interested in these kind of videos, I myself as well, to see other people's portfolio, so I completely get it. There's not gonna be much changes in my portfolio in the upcoming 2-3 months. So I don't see a reason why I would update you guys every month on it. And it might be a half year or a yearly thing depending on how I change my portfolio. Anyway, that's it for today. I hope you guys enjoyed it, and see you guys in the next video. And I hope you guys have a great evening and a great weekend, actually. It's Friday.